should be working. All right, so we'll talk about the stock market today, of course. We'll get into everything here as we go. We're playing a game also, by the way. It's called Guess the Dow. If you want to play along with us, you just go to, that website, bottom right-hand corner of your screen. You can place a guess of where you think the Dow will close at the end of next week. And if you're the closest, without going over, we'll send you a $100 gift card. Or if you're one of our customers, we'll actually just credit your account the $100. Totally up to you. You can participate in any way you like. So I hope you'll check that out. We got a class coming up this week. Every week we do classes for customers to teach them something else that maybe we can't do publicly. Things that I can't really say without getting in trouble by the regulators. Or just to teach you something new. Maybe it's something you never heard of before, or give you an update on how things are going. So this week's class, we're going to talk about Social Security and some of the mistakes I see people making. We're going to set it straight so you can get your dough straight and keep it straight. So we'll be focused on that on Thursday, live in the dojo. Hope you'll join us from there. All right, stock market lower by 140 points on the Dow today. The S&P lost 25. The NASDAQ lost 118 on the mix there. And really, it's drama. Right? At the end of the day, we're just sort of focused on the drama right now when it really has no meaningful impact on the markets in general. And look, we started higher for the day based on trade talks, right? Trade optimism. We got 2 weeks to go until the big dogs of negotiators come over here and start negotiating the China trade deal. A lot of people don't expect anything. I see the odds posted about 15% that anything gets done, which I think is kind of high, to be honest with you. But hey, that's what it is. So we got that going on. You got some comments about China buying the soybeans and really kind of stepping up to the game on that front. And not anything that we haven't heard before. We know it's there. It's something that was existing there. But the markets were happy to move a little bit higher anyways. We're sitting near highs, just sort of floating around. And people were like, all right, that'll work for me in a short term. I can remain bullish and excited. Well, then we had consumer confidence numbers come out. Big miss there, actually. And you got to really dig in deep into the consumer confidence numbers. I do this sometimes in our classes if people are interested. But in consumer confidence, when that number comes out, they actually break it down into a number of categories. One of them is, how do you feel? It's a survey. How do you feel about current economic conditions in the stock market? And two, how do you feel about future economic conditions or the stock market? Well, the current conditions, everybody was pretty much the same. It dropped a little bit, but not really that big of a deal. The future expectations by those that were surveyed were very weak. It was actually a big miss there. So the real hit came from that. And that's when the market started moving a little bit lower today. Then you had President Trump talking at the UN on Iran and China. And boy, that guy wished he was anywhere else but giving that speech. He seemed to have zero interest in being a part of that speech there. It was really kind of funny to watch him do his thing there. He not wanted to be a part of it. I don't blame him. He was just kind of reading out the speech as it was given to him, and so markets didn't like that. He was really tough on Iran. He was really tough on China, although he was just super like, yeah, whatever, man. Just, we gotta do our thing, and really sort of tired, and I don't know. It was what it is. I can't imagine it's very easy to get excited about that. Later on, he stepped up, got real excited with the with Boris Johnson there from London. So it was pretty interesting there, at least later in the day. But anyways, you got that going on. So the markets were a little bit lower. And then old Nancy Pelosi, I believe she's coming out here shortly, but she came out and teased the idea they're going to start impeachment inquiries, which basically just means the first official start of that. And so the markets really started to sell off in that case there. Midday, you got a little bit of a pop in the markets because President Trump said, all right, fine, I'm going to release the transcripts of that call that you guys are questioning on there. But that only really helped the markets in the short term. A little bit of history before we get to the charts. The last two impeachments happened in the second term of a president. So we're only in the first term of President Trump, in case you're not paying attention. So the last two impeachments came in the second term. This one's coming before the beginning of the second term, assuming that he wins. So it's largely kind of seen as political. If you look at the Clinton impeachment there, the stock market was actually severely higher after that and during that, towards the middle of the impeachment there. So, all right, that's one. You go, all right, well, the stock market seems to be higher. If you look at the Nixon impeachment there, the stock market was actually much lower. However, I don't know this. I briefly just sort of looked up the timeline of when everybody was president. The the energy crisis. That was a big deal, and that sort of overlapped into his presidency there. So that had something to do with the markets there as well. I won't pretend to be a historian for you, but just to let you know, even 50-50. Will the markets go higher or lower if this thing comes to fruition and they keep moving higher there? So we'll see. As far as I know, House Democrats are gathering right now. They're going to release something at 5:30 if they haven't already. So we'll probably we'll cover that tomorrow if that's something that helps you out. Yeah, we'll go from there. I don't see any, I don't know, is this thing even working, man? This YouTube changed how they do things. It's really a bit of a pain. I don't see any ability for anybody to leave a comment. If you're watching, leave me a comment. Just let me know you're there so I know this thing's working. Because usually you people are going crazy talking to each other, and I don't see you guys talking. They got this new screen. Ugh. I just, changing things on me. I'm going to move ahead here. Anyways, let's go to the stock market. Here's the S&P 500 pulling back off of those highs. Like I said, we're talking about a catalyst. We need a catalyst, whether it's we pause and sort of float around here and wait for earnings. Maybe that's something. Get some trade news, but that's still a couple weeks away. So basically, we're just stuck. Really not much going on here in general. Energy, a little bit lower on the day. Here's the price of oil actually pulling back from that little zone that had been settling into there. That's all going to be economic concern, right? Trade concern, things like that. So anything related to oil today, oil service stocks took the biggest hit, down 5%. That took a lot of our 52-week highs back under their, a lot of our stocks back under their 50-day moving average, so not good there. Oil explorers were a little bit lower on the day. Anything really oil energy related. There we go. All right, so this thing is coming to life here. This is really silly, man. I don't like it. I have to find somewhere else to stream. And so that was the case there. You look at some of the areas that were weak today, communication services. A lot of that's going to have to do with Facebook. Facebook makes up like 18 or 19% of this category. Don't hold me to that. It's 18 or 19. It's one or the other. And so Facebook a little bit lower on the day, back below the 50-day moving average. They're buying a company which is like super futuristic, and you can control a computer with your mind, and supposedly this all exists already. They didn't say how much they're buying the company for, but if you look at Facebook, shares were lower on that news as well, being the acquiring company there. So you got that. And you also have trade-sensitive areas that were lower on the day. Semiconductors pulled back about 1.5%. That's all trade-related there. Utilities moved higher. That's your rates moving lower. So utilities hitting new 52-week highs. We go over look at rates. Here's a 30-year bond trading higher back above the 20-day moving average, and the 10-year also higher on the day. And that spread between the 2-year and the 10-year tightened up the most that it's been in about 2 weeks now. So you're going to have that talk, more of the sort of inversion again coming to light. I think there's only just a few points separating the two at this point. So you can see it on the scroller above when it comes up there. So that was some of the weakness on the day for you. But all in all, anything trade related today took a little bit of a hit, and defensive in nature, interest rate sensitive things were higher today. So if you want to just kind of get the brief overview there. All right, let's look at stocks today. You got CarMax officially reporting their 7th earnings beat in a row. Earnings beat by 7 cents. Their overall sales were up 3.2%, which is a little bit shy of what everybody was expecting. Couple interesting stats here. The average selling price for them for a used vehicle was up 2.9% to $20,581. A used vehicle, $20,581. Do you think that's high or low? That seems high to me. I don't know why. Maybe people spend a little bit more on cars. All right, there you go. They did $5.2 billion in sales versus $4.77 billion a year ago. A lot of that on the used cars there. Now, Carvana took a bit of a hit because the CEO actually said, this whole online car purchasing thing that they're working on, they expect to have it done by the end of the year, right? The end of their year. So looking pretty good there. That'd be the start of 2020. So Carvana taking a hit today, 5.6% on that new competition. Carvana hasn't really had severe competition leading up to this point. So they were lower. CarMax was a little bit higher on the day. Wynn Resorts, thankfully, up 1.1% on the day. They were upgraded at Goldman Sachs, $155 price target. That puts it way up here. Look. That's a decent move for them. Goldman Sachs, the analyst, had a price target at 140, so he was already bullish, didn't need to adjust or anything, but he decided to go to 155. He's 57% accurate with a 3% average gain so far. Not bad, I guess, considering the space that he has to focus on. He says that this space in general is set up to outperform, so that would mean, yeah, he likes Wynn, but he also likes the rest of them as well, especially with that Macau exposure there. So stock was a little higher. Chipotle pulled back just a little bit today, 2.25%. Check this out. So you know this stuff goes on. I can share a few cool stories with you, but a Chipotle analyst physically stalked customers to see what they bought. Right? This happens, by the way. This is not like something new. So he physically stalks people, was an analyst from William Blair. He found that 22%, now we have to take his word for this, but 22% of the entrees that were sold included the new carne asada. The carne asada is like 6 to 8% more expensive than the regular steak, at least here. I haven't got it yet. I've been to Chipotle a few times, and it looks horrible, to be honest with you. I don't know if it's the one that I've gone to, but it just didn't seem appealing to me to spend the extra money. But anyways, he said about 22% of those entrees included carne asada, the upgrade there, which should have helped their bottom line. And you know this stuff happens. Like there are people that go study sales of retail stores. They go study the actual transactions of different online companies and things like that. The best one that I ever heard, if you have a second, was, I forget who it was. It was a big hedge fund. I don't think it was Third Point. I don't want to say who it was. I can't remember who it was, to be honest. They actually paid for satellite data so they could study the traffic going in and out of Walmart. Right? And so they would study a handful of Walmarts. They set up an algorithm to sort of analyze the car traffic, and then they would measure that day over day and sort of predict their earnings going into the next quarter. That's for real. That's actually been used in movies and stuff, but that really did happen. So people going to extreme lengths to study. I don't know that sitting in a Chipotle all day watching people order stuff is extreme lengths. That's kind of old school there, but still, stock didn't seem to mind. It was lower on the day. That's had a great run, right? I mean, there you go. We were talking about BlackBerry yesterday, so I thought I'd bring that up today. Stock was much lower on heavy volume today, 22% lower. They missed on earnings, they missed on revenue and things. This is more like a software company, like an online, they call it the Internet of Things type software company. They don't really do the phones anymore. And what the problem is they have 55% of their revenue comes from this sort of software sector here. And revenue was down. Right? So overall revenue is lower. That makes you go, okay, VMware and Microsoft must be stealing share because they're the most direct competition there. And so BlackBerry just getting hit again. These poor guys, they repositioned their whole business. Things went well for a while, and now just back to trouble. All right, AutoZone reported earnings as well. They missed on earnings, but they're focused on commercial sales here. So this is going to take a little bit, and this is sort of priced into the stock, I think, a little bit here. Currently, only 20% of their revenues come from commercial sales, meaning going to the mechanics down the road and saying, hey, rather than order from Napa or whoever, come order from us and we'll deliver to you and all this stuff. The other companies have already a really strong foothold in that sort of area, and AutoZone said we want to increase that. So we also want to do the retail DIY car fixer guy, but we also want to do we want to increase sales to the mechanics and stuff locally. They're working on that, and it's working, but it's still a work in progress. So only 20% of their revenue, and because they missed on earnings and everything, stock was a little bit lower on the day. All right, what else do we got here? 62.4% of the stocks are still above the 50-day moving average. It was 70% yesterday, and that's largely because of the oil names. We lost a lot of those oil service stocks, oil explorer stocks that were previously above the 50-day and helped juice our number a little bit. We lost those basically today, so that hurt, and that's basically the sector that took that number down about 8 points. 29 new stocks hitting 52-week highs today. 15 of them were utilities. Right? So you could just use like the XLU here and just go look at the utility sector. You could tell it had a strong day, 1.1% on the upside there. But 15 of those names were, out of the 29, were utility stocks. So there's a clear focus, people willing to overpay for that area right now. And that's okay. Same as yesterday, there were a lot of the defensive names still in the mix there. Walmart, a little bit higher there, something that people run to when the economy gets a little weaker. Procter & Gamble, the same. Dollar Tree also hit new highs as well. Notice how it's not really going anywhere fast because how extended it is in the short term, so I'll keep those comments that I had from the other day. Yeah, 2 new lows on the day. FedEx continuing to push lower, working on getting extended. If you're a catch the falling knife type person, I don't blame you, but this is not really extended. And I'll keep saying that until it does, really. And then Fox. Fox has just been weak in general, so hit new lows there. As far as our stats go, you got Nielsen. Nielsen officially hitting the stats it's supposed to there. 66% of the time it falls over 1.16% over the next 5 days. Took 3 days to hit the magic number. That one's officially done. I'm going to take that off our list. We'll focus on something else for now. It's kind of cool looking at these stats. No, I like them. I like them. I'll follow along with you. Now, Netflix has some work to do. So let's just do this here. That's while we're playing around. Netflix, oh, I already have a line there. Did I do that earlier? No, this is the break-even line for the year. So this current line that's on the chart is where it started at the beginning of the year, up 50%, down 50+%. And now in the short term, we're just looking at the stats saying 67% of the time it bounces 1.88%. From being as extended as it is. So I'm going to draw a separate little line here just so we can keep track. It's got to actually bounce from, well, it's not going to work, actually. It's going to look a little sloppy. We'll put it there anyways. Maybe we could just color it a different color. I'll play with it. But so anyways, we actually have to get 1.88% above this line because today Netflix was down on the day. Let's make this one bright green. Make it a little thicker so we can see. And there we go. Oh, wrong line. Okay, we'll use that number there. So anyways, down 4% on the day. That weakness, right? Relative weakness. I've done this from time to time where I'll try to point out stocks that are relatively strong versus weak. And when you have a stock that's already relatively weak and the markets show weakness, all the traders go over to these stocks and they'll play it to the short side because it's sort of like low-hanging fruit, if you will, right? It's picking the easy pickings there, or however they say it. So Netflix, a little weak today. That is day one of our little stat here, so a little work to do on that one, but we'll keep track of it for you. All right, Nike reporting earnings after hours, hitting new highs. So breaking out of this really sloppy range, actually, but they beat on earnings, trading around 91, I believe, somewhere in there. Let's see where it's at now because I didn't check it well, I checked it earlier. See what we can find. 90, almost 92. Okay, so trading off the screen at the moment, just trading around that 92, 91.87 area. Beat on earnings, beat on revenue. They're working on selling shoes directly to the consumer rather than going through the chains and everything. And it's working, right? That's clearly a standout from their earnings here if you want to dig into that and read through it a little bit. And yeah, I think that's basically all I have to cover for you. The CEO of WeWork stepped down. He kind of had to. Now they'll be able to go public, but probably not anytime soon. They're going to let things settle down. This happened with Uber, right? Same thing with Uber. You kind of have a wild card as the CEO questioning a lot of things, and he didn't have the best answers, not to mention a shady track record. So they put in a new CEO, real calm, collected guy, balding, relaxed and everything. They do some TV commercials, let you know he's at the helm, everything's smooth, he's got it from here, face recognition, and then boom, go public, right? So it's the same floor plan as what they're doing with WeWork. The new guys that are stepping in have experience with like AOL and all these companies. So give them a chance to put their face in front of it. They'll go on all the financial media. They'll show how they have a plan. They can answer all the questions about their debt and stuff. And then all of a sudden they'll go public and they'll get all excited and everything. So that's that one. I'll leave you with a thought here, actually. Hold on. Let's just go through the rest of this real quick. What do we have here? Oh, we own Nike, by the way, so that's a good little pop there for our Nike position. Tomorrow, you got KB Homes reporting earnings. You've got 4 different Fed members speaking tomorrow, and Best Buy's Investor Day. So maybe some talk about the healthcare stuff that we talked about yesterday. Maybe they'll point to that a little bit more. And I'll leave you with this here. Bernie Sanders was out today. You notice how he's been out of the headlines? When that man wants some headlines, he can get right in those headlines now. He got the headlines today because he said, quote, billionaires should not exist, end quote. Those were his actual words, and people went nuts when he said that, like excited. He said that he will cut their wealth in half over the next 15 years to pay for his programs like Medicare for all, that he's trying to shoot for, and paying for college and all that stuff. So he flat out wants to just make billionaires not exist. That was his word. How do you feel about that? I know it's a political sort of comment there, but where do you land on that end of the spectrum? Anyways, think about it carefully. I'll answer your questions. I'm going to try to use this new thing if I can here. I really dislike this. I'm just like an old dog here. Just can't get used to this. All right. China trade talks are failing. Well, we'll see. We've got a little bit of time still to go here, but yeah, we'll see. Don't forget gold. Yeah, gold had a good day. Silver even had a good day after yesterday's great day. Up about 0.5% for gold. Like I said, defensive areas. The dollar was weaker on the day. it's staying strong, that gold up there. And if you want to go look in the dojo, we did a class on this inversion, and we did a class on gold and everything, how it actually performs ahead of recessions. Went through the data with you there. Hey, Dustin, you think it'd be a good time to start building a bond position for a long-term portfolio or wait for lower prices? It's a tough one. You're long-term there. It's hard to chase this, kind of like it's hard to chase gold. I mean, I could see a small position or something. Hard to chase there in the meantime. Yeah, it's a tough one. Yeah, you say long-term. I guess I'd ask you to define long-term maybe, but I'm not excited about it, as you could probably tell. Beyond Meats, yeah. So a lot of the IPOs, recent IPOs took a good hit today. Beyond Meats included in the mix there, 3.5% to the downside. Amazing that it's holding up in this area. They will report earnings next month, and analysts set up high expectations. Yeah, well, it's still excitement there. Yeah, I mean, it's going to be, you know what the earnings will be. It'll be more about expectations. Just like the last earnings report. Yeah, we're losing money, all this stuff. But hey, great things coming in the future. So that just sort of thin air stuff. I don't know. Bernie may have just shot himself in the foot with that comment. I don't know. Everybody seemed to love it, what he said there. The markets don't love it. Markets do not like those conversations. They don't like Bernie Sanders at all. The stock market. What do you think of the solar energy sector? It was the best performing area of the market. Still is almost the best performing area. You could use something like, if you like ETFs, you could use the TAN, the TAN, conveniently named there. Here's the TAN. So it prior to the other day, it was the best performing subsector in the S&P 500. Actually, with software kind of pulling back, it may be. I haven't done that. I haven't looked yet, but very, very overpriced in the short term, right? So you're looking at something there and going, hey, well, what do we have year to date? You got year to date. Let's just go with a rough number here. Rough year to date performance of 66%. You want to chase that here? That's a tough one. I feel like waiting for a discount. I'm a discount guy, though. Could just be me. Could just be me. You say in the medium term, though. So in the medium term, I think you'd be able to get a little bit cheaper. I don't know for sure, but I have to be careful what I say. I get excited. Yeah, I think that's about it. I appreciate you guys hanging out with me today. We'll be back tomorrow to do this all over again. And I think on Thursday we'll be ready. If you don't know, our FinTips videos, we put them out at 1 o'clock each day, provided everything goes smoothly. But I think by Thursday I'll have all the data ready for the Dave Ramsey funds. So you know how Dave Ramsey says, so pick these 4 funds and you'll average 12% a year. Well, we actually pulled the data from every single growth fund, every single aggressive growth fund, international fund, and growth and income fund. We pulled the entire history of every single mutual fund out there and ranked the performance and then built portfolios based on all of them to see if you really could get that performance. And we're still putting the final touches on it, but I don't mean it to be like going after him or whether the performance is good or bad. I'm not trying to do that. But just in general, like where do you land, right? Because so many people give the man a hard time. Hopefully I can prove him right, we can and go on from there. So I think I'll have that ready by Thursday. I might do it as a live thing. I don't know. We'll see. But yeah, that's all I have for you. I appreciate it. If you would, hit the subscribe button. That really helps us out. And keep us in mind, right? If you're working with an advisor who's just not keeping you updated, is not working with you, or you just feel like you want to learn a little bit more or have more of a hands-on sort of touch to your dough, happy to help. jazzwealth.com, and enjoy the rest of your day. We will talk to you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.